Hello, everyone. Thank you for joining us for the platform panel.
Thanks.
I'd like to give each of our panelists a chance to introduce themselves. I'm going to start with Ruben.
Hi, I'm Ruben Sushman. Right now I'm working for a hedge fund. It's a China license, mainland China license, doing business in Hong Kong, and it's mostly traditional markets. They divvied up a little capital to me, and I trade crypto, and I'm starting up a new crypto exchange, a Malta license exchange in partnership with a Forex broker in New York, and I'm also starting actually in the next month a crypto mining operation in Central Asia, in Kazakhstan of all places.
Hi everyone, my name is Joel Kopshoff. I got into crypto in 2013 at start, and I got more into crypto full-time since 2017, at the middle part of it in June. And so I've been advising lots of projects, and I'm kind of like the Robin Hood for traders. I like to teach people how to trade. I come from an educational background, so I worked in education for 8 years as an international educator. And what drew me to the space was the scams, and teaching people how to avoid them, and teaching people how to get started trading and finding financial freedom. So I like to call myself like a Robin Hood, and people call me Coach K as my nickname. So nice to meet you guys.
Hi guys, my name is Alex Katsaros. I'm the CEO of TopFX. TopFX is a company specializing in business to business. We offer technology solution to brokerages in the CFD space. Our biggest product is our all-in-one solution, where we give all the technology, liquidity, platform, and CRM, actually everything that a brokerage needs to operate. Besides that, I'm in a panel for platforms because I used to be head of product development for CTrader, which is a pretty popular CFD trading platform.
Hello everyone, my name is Bobby Winters. I am the head of institutional sales for Charter Prime Australia. We're an institutional FX CFD brokerage based out of Australia. We also run a retail division out of New Zealand and assist in the FX space. Had a lot of experience in FX, crypto as well as a trader, and happy to be here as well, so thank you very much.
All right, so we'll start off with, as it's a platform conversation, and we have a good diverse group in the audience. We have Joel and Ruben, who are specialists in real crypto or actual physical crypto, and then Bobby and Alex are specialists in CFDs. So we'll start off with what are the leading and emerging platforms? And I'd say that each of you, based on your expertise, we'll start with the leading and emerging platforms in the actual crypto space.
Well, with partnering with some of the FX providers, they have a numerous platform. I think it's, what are we using? We were using TT, but that's in the future space. So we're gravitating to, is it WMX, I believe. Yeah, and the other one, MT4 out of New York, and they're using that to facilitate crypto that had previously been in the FX space. So my goal is to try to incorporate some of these platforms that are already in the marketplace and use traditional stop losses, trailing stop losses, immediate or cancel, fill or kill, in accordance with the investor's goals. So I find that as one of my biggest issues. Can I let the financial experts I know, the institutional experts I know, utilize those platforms in the same manner? So a lot of it has to be built out along with the current platforms.
Yeah, in terms of challenges in the platform space, I find that I was just talking to these gentlemen outside that, you know, the really big problem for new people coming into the space is these platforms are really challenging to actually start using. I don't know if any of you guys in the crowd have actually used something like MT4 or trading platforms, whether it be FX or crypto. Very much are they difficult to use and start off with, and they're very confusing, and they could take, you know, a couple weeks to actually learn and not make mistakes. I mean, I know people personally that lost thousands of dollars on BitMEX just because they didn't know how to set their proper stop loss, or didn't know about the difference between a limit or market stop loss or a trailing stop. So the really big challenge, I would say, at least in the crypto space, they have to develop platforms that are going to make it 10 times easier for everyone to actually use. So the reason why we created our platform was because Binance only lets you choose one option. You can only set a stop loss and you can only set a limit, and that's basically it. And so because of that, we built it so that you could make multiple different, different instruments at the same time. You could use a stop loss, you could use a trailing stop, you could use a profit trail, you could use sell it gain, and because of that, it made it a lot easier. And we made it simple. So
I just, I guess, kind of focus in on the question of the leading and emerging platforms. If you were to start a crypto exchange today, what would be your software options? Who are the leaders? I know MT4, for example, is a leader, and CFDs and FX.
Yeah, MT4 previously. And when I'm dealing with my partners, they had stated there was a old Microsoft software that was used, and there was a couple exchanges, and I was thinking of, I'm still going to have a discussion with them. They just blew up. It was Coin Pulse, and they were using a very old Microsoft-based platform. My partner said that we would not want the technology from them. There's nothing of value there. So they were using that, and they blew up for a number of reasons. We can get into that later, but basically their platform using this old Microsoft technology was a failure. So the MT platform that's out there is primarily used until someone comes up with the next version of it.
So pretty much it sounds like there's really no leaders or de facto platforms in the market on the pure crypto side.
no.
On the pure crypto side, what the goal is to try to incorporate the platforms my goal is with some of the traditional financial platforms where the bids are on the left side as opposed to the right side in crypto. And I'm sure there's many people no matter how experienced they are, sometimes they get confused if they're going from a financial instrument to a crypto because it seems like they're reversed. And I still can't figure that out for the life of me.
So then I guess, Alex, besides CTrader, who would be the other leading platforms on the CFD side, and do you find that with CTrader that you experience the same issues being discussed, such as lack of ability to set risk parameters, stop losses, take profits in the CFD sector?
No, I don't consider CTrader to be a difficult platform to learn. We don't have issues with adaptability, like my friend here described. I would say that in the Forex industry, the CFD industry is very mature already. And it's based around conversion, it's based around making people trade fast and getting to the space fast and easy. In the CFD industry and in CTrader, for example, there are a lot of different products depending on the level of expertise of the trader. I mean, do you want to trade on your mobile phone? Where you're going from work to home with a mobile device that allows you only the basic trading functionality? That's very easy to learn. You want to mirror another trader. You don't want to trade yourself at all. You just deposit, mirror someone through the copy service, just deposit, press play, you're mirroring some experienced trader, you don't have to do anything else. Whereas I do agree that there is a certain level of depth for the people who want to go for that depth. If you want to get into advanced charting, you want to build your own custom indicators, you want to build your own robots, I'm sure not everybody can do that. I would say like a very small percentage of people can do that, so I would agree with that. So that's what we are trying to do. We give the product, the appropriate product to the appropriate user.
Right. And Bobby, what's your take on the top platforms in the market?
Well, I think one of the things to also look at, and especially maybe living in Asia and on the FX CFD side, is also seeing kind of regional preferences for platforms, right? So, we've seen CTrader does some great things on their side, but you see that maybe in other platforms, or say like in Thailand, copy trading, like you mentioned, also is very, very popular. So you need to have a platform that is adaptable to have certain regional kind of needs of your clients and traders. Same things like on having a proper back office, which a lot of guys don't talk about on the platform side, and having the tools that introducing brokers or money managers and things like that need on that side. So I think there's a lot of different up-and-coming platforms. I know you have a great one as well that you've been working on. I think in the FX side, it's a staple to have kind of the big 3-4 platforms, MT4, MT5, C-Trader, and then a couple new ones coming in, maybe something like eToro's social trading platform, which got a lot of press from doing on the crypto CFD side, and now they're kind of moving over to a full brokerage on the crypto space. But that was an interesting transition from something that was an FX kind of product already established and now moved over there. So there's a lot of new up-and-comers, but I think one of the things is they're going after different segments in the market. So whether it's social trading, higher-end institutional clients that need depth of market or tools like that compared to other things.
Yeah, I've noticed personally when looking at various crypto systems, they all seem to be supported through this TradingView, at least the web ones. So I'm curious for each of you, what is the relevance of TradingView in crypto and crypto CFDs, and how can one differentiate themselves using a common charting package? Maybe, Ruben, you can start off explaining what TradingView is and does for the people that don't know.
Yeah, so TradingView is pretty much what I would say 80% of traders in crypto use. And even if you go onto the platforms that they have, every single platform from Binance to Bittrex, everything has a TradingView integration. Even my own platform has TradingView integrated because it just is it's a simple tool. It's not very difficult to use, and basically what you use it for is to set up your charts. So I use Ichimoku, so I can use TradingView to actually set up my trades, and it's quite simple and easy to use. And so you find that I would say out of every trader I know, especially ones that are very big on Twitter, 99% of those guys are using TradingView because it links to BitMEX and some of the bigger exchanges in crypto. So that's the first part. The second part is the traders that I know that are scripting. So the ones that make their own trading scripts and trading studies, they're using TradingView and integrating them via Google Chrome, via bots, and basically automating their trades. And then there's also the fact that you can use TradingView to copy trade using some software that's been out there too as well.
And I think there many traders are tying into APIs. Quite a bit. That guy McAfee just set up a paid subscription paid subscription service where you put in all your APIs. So these APIs, for those who don't know, are application program interface. So you take them from each exchange that you trade on. You have to have the money on the exchange. You have to be set up on the exchange, either normal customer, institutional customer, KYC, whatever, or not required. You plop it into there, and then it interfaces as a way of trading the various exchanges automatically in a automatic process utilizing his platform. So I thought that was pretty interesting, and it ties into a TradingView application of your whatever model you use on TradingView. So if you say, all right, I want to use money flow, Laszlo's, Barini's, I know all these guys from trading futures and equities and options. So you want to use certain systems, you can tie it to TradingView and execute your trades while you sleep or while you do other projects or responsibilities.
What would make, though, two separate platforms using TradingView for crypto clients like one versus the other? How do firms differentiate?
Well, the problem, or not a problem, but the thing with crypto is there's several different types, and one exchange may not have the same coins as the other. So
liquidity.
Yeah, absolutely, liquidity, and also the fact that your options also will expand. So some coins won't be on one exchange and the other, so I would want to have multiple APIs on different exchanges if I'm looking at certain good projects that may not be on all the exchanges yet. A good example is like Quaint. It's a really good project, but it's not on Binance, so I can't trade that coin unless I have another account on another exchange, or whether it be on Bittrex or BitMEX, of course, is the biggest one, but they only have 7 coins. So yeah, you could trade like the top, a couple of the top coins, but you can't trade all of them. And so you want to have options. And so what these API integrations do is they make it so I could have 30 accounts on 30 different exchanges, but control it all from one tool. And that simplifies a lot of it for people, because my big thing with crypto right now is it takes forever to actually go from exchange to exchange exchange, and actually set the buy orders. And so APIs actually make it 10 times simpler, and you can automate it, which is really the key point.
That enhances your liquidity. Otherwise, you can't get anything done, and you're sitting there all day. Like last week, I had an order, and I put on Binance, and it was supposed to be engaged, the order, so to speak. What do they call it on their system? As soon as it hits a certain level, it engaged, triggered, and it triggered, and then it missed it by like 0.02 or something like that. It's like, so that's why it's really necessary to incorporate it together with an API and the analytical tools.
Do you have anything to add, Bobby or Alex, on this?
I would not say I'm an expert on TradingView, but actually I like the functionality that it has for stocks. To be honest, it has a very good stock screener, and I kind of used it in the past a couple of times, and I respect it. It's cool. It's cool, but I'm not an expert on it, so no more opinions.
So I've always found that the biggest risk in trading FX or CFDs is that you deposit money and maybe you won't be able to withdraw it. In similar fashion, when you trade crypto, yeah, you'll be able to buy it, but you might lose it. You can't lose a CFD, but you can lose your actual crypto. So I'd like you guys to discuss, pick your poison. What would you say to a trader that had to choose between the two? What's better, what's worse, and what do you need to think about when you compare those two? If you like crypto and you're choosing to either lose the contracts you buy, or you're choosing to not be able to get the deposit back from a particular brokerage, which would you choose and why?
Well, the thing about crypto is there's 1,000 exchanges, and so really it's about doing your research into these exchanges and seeing, if you're using Binance, we saw they got hacked. It happens. I mean, every institution has some type of form of loss, and that's part of business. But Binance has SAFU funds, they have insurance funds. BitMEX also has that. I believe Coinbase has it. So some of the major institutions have that. So you don't have to worry about losing your funds. And if you do lose your funds, they're
losing your coins.
Losing your coins.
Like say you have your own wallet, just losing it.
Oh, you mean just like losing your wallet completely?
I'm sure there's people that buy. I bought Bitcoin
Absolutely.
and lost it.
Well, the thing is also we have seed keys. So if you're using something like a Trezor or a Ledger, you can write down your seed keys, put them in 2 locations just in case your house burns down or something, God forbid, happens. Or you have something called crypto steel with Trezors, where it literally can't burn, rust. Your house could burn down and it will still be there, and your seed keys will be safe. So you do have options, and you could put a safe deposit box and put your seed keys in there. And if you lose your device, it doesn't matter. You just put your seed keys in a new one, and boom, it'll pop up. Good example of that. My friend carried $65,000 on his Trezor, got into a cab in Thailand, left the cab after like a 14-hour flight, and he was like, oh my God, I lost my Trezor. I'm like, do you have your seed keys? He said, yeah. I said, do you think the guy's gonna be able to crack your 8-digit code? He said, no. He went out, got a new Trezor, put in his seed keys, and boom, they were there. So it is hard to lose it if you
don't know what you're doing.
If you don't know what you're doing, yeah.
You gotta really know what you're doing in the crypto space.
Just have a bit of education before you start. That's why I started in this space, because you do need to have some fundamental education. And I mean, you could lose money and you can lose cash. You can lose lots of different things. You can make bad trades in CFDs. So you can do all that anyways. So I would say that it's about really getting the knowledge before you start. And this is the problem with a lot of people. They chase the FOMO cycles like we have with Bitcoin. And when you do that, that's how you get wrecked, really. It's not about, it's not about trying to like do it and not do it, or choose one or the other, because I would be happy to trade on their platforms or my own. It doesn't matter. If you're a trader, you trade both. But of course I'm pro crypto, and I'm going to focus more on that because I believe that fiat currencies are they're basically going to lose more and more value over time. So yeah, educate yourself, learn how to set up your platform, and proof of keys. If you put money on an exchange and they get hacked and they don't have insurance, I'm going to tell you guys this right now, those coins are not yours anymore. Once you put them on an exchange, they're not your coins. The exchange is custody of your coins, and if that exchange has a Cryptopia or a Quadrica, you're going to lose all your coins.
What
you're
is
never
a
going to see them.
Quadrica and a Cryptopia?
So Cryptopia is a New Zealand exchange. They got hacked actually twice within a year and lost basically everyone's coins, and now they have some of them left. They try to figure it out, but they don't really know who has them because crypto is really hard to track. And so because those coins are gone, yes, there's alerts that tell you when those coins move afterwards, but it's kind of too late. You don't know who actually has those coins unless they put it on a KYC'd exchange, which then tells you who the person is. And then we have Quadrica, who, this is a really great, a great story, but a horrible story for a lot of, and I have friends that have personally been affected by this. You put your cryptocurrency on an exchange like Quadrica, and they found out later the owner apparently died. He died in India. Everyone thinks that he's faked his death and did plastic surgery, but that doesn't matter. But he disappears, dies, and all the cryptocurrency from that exchange is gone, and no one knows where it went. And so what they end up finding out recently is this guy was actually taking people's cryptocurrency deposits, depositing it on another platform, and trading it in leverage to try to make profit for himself.
I saw a blurb this morning. I didn't read the article yet, but I saved it. That's what came out this morning?
It wasn't this. It might have been another article that was written about it, but that was last week. They came out and said that this is actually what happened.
He was trading.
So
he was trading people's assets.
Just to chime in for, I think Bobby has something to say here.
So on the flip side of things, right, I'm in the FX and CFD space. I'm a big fan of crypto as well. I trade crypto on active platforms, Binance, different spots like that. So I've seen both sides of things. Looking at kind of some of the unregulated crypto brokers, things like this, and some of them will have certain custodian services, additional insurance protections. Find Binance, we saw, was hacked, got their funds back, et cetera. On my side of the market, I work for an Australian regulated brokerage, Cyprus regulated brokerage as well here. We have, different policies for AML, knowing your clients, having to have certain things in force, even on a crypto CFD, to provide, additional assurances for clients. We have an AML procedure. I have to know who you are, where your funds came from. We do this whole thing just like a stock brokerage would do. And because of that, you have those additional protections in the case of, a firm going bankrupt and having all funds fully segregated in an account, being audited, shown to everybody, much more than I would say Tether has been fully audited. Sorry, but just, So when, looking at both sides, I see that my side has regulation, has policies in places, has additional protection for clients. That doesn't mean it's the best thing to trade as far as crypto versus a CFD contract. My costs might be a little bit higher, but I give you more leverage. But you also have more protection. So there's flip sides to both. Like for me, if I was buying straight up crypto, absolutely, I think on a crypto exchange, great way to do it if you trust it, have a wallet, things like that. If I'm starting to day trade or doing some more interesting stuff on the crypto side, say I want to go short, I much rather think I'd do it on the CFD contracts. More leverage, a bit more flexibility, not as many coins, but there's different ways you could hedge, do things, and have it in a regulated environment. So I see both sides, but it really is up to the user. If you're going to go to a Binance, make sure that they have everything in store versus Quadriga, which was what, 200 plus million, something like that. That doesn't happen in my industry per se. We'll have bankruptcies. You might not get all of your funds back. It might be a certain part when it goes into administration, but there is a legal process for this which doesn't exist in crypto yet. So those are some of the things you have to look at.
Well, I think that's one of the reasons I'm going to a licensed entity of Malta. But as I go to the licensed entity, I end up with more headaches, more expense, more cost, and then the investors, the anonymity dies out quickly. The institutions, maybe they get more comfortable, but they still want anonymity when the flow of funds. So those are some of the, as I call them, the pain points. It's good and bad, as I say.
But can institutions really demand anonymity for flow of funds if you're in a regulated hedge fund per se, or things like this? This is KYC, AML stuff again. So as a Malta regulated brokerage, I'm sure you'd have to soon know your customers'
yes,
AML, where did the funds come from? I mean, something you could probably chime in on too.
Yeah, well, I have a pretty clear opinion, short opinion on the subject. For me, I would say that if someone is a new trader, he's not into crypto that much. Someone doesn't know the technology, he doesn't know about wallets, he doesn't know this stuff, and he wants to trade. He wants to make some money of shorting BTC or whatever. I would say that CFDs, but regulated CFD companies, that you cannot lose your money like you see in a regulated CFD company. If you go with that regulated scammers or whatever, okay, this has happened in the past, but regulated companies, your money is safe. It's easier for people to just deposit in their fiat currency, trade, take part the profits in fiat currency, and that's it. However, if someone wants to actually back this technology up, if you're a crypto enthusiast, it's not about trading. If I cannot believe in cryptos. Why not? If I want to back it, I want to own cryptos, I would suggest to people, buy the cryptocurrencies that they want to back, hold them, and hold them in cold storage, and not go into anything else. I wouldn't go trade on exchanges, to be honest, if I not really know what I'm doing. Alternatively, there is one small catch into that. If you really want to trade those thousands of altcoins, there is no other way. You have to go to exchanges. Sure, you go to exchanges and you trade those altcoins.
I'll just chime in on that. While we're talking about custody, we do have things called DEXs, which are decentralized exchanges. What that means is basically you can hold your own keys on your own wallet, whether it be a mobile wallet like Trust Wallet or your own Trezor or Nano or many Self-Key and all the other coins, coin wallets that you can hold. And what you can do on a decentralized exchange is basically not trust anyone else with your funds. So you are the ones who has control of your funds. So Binance just opened up their decentralized exchange. How it works is you hold your own funds and you're trading with other people that are holding their own funds, and you're basically swapping, and obviously they're not very used yet. There's liquidity is super low, but over time, especially, and we still have KYC there, but over time what it'll be is like my funds will trade with yours. And so that way I don't have to trust a financial institution, and I don't have to trust the government. I am my own wallet. I am the one in control of my own funds and my own destiny, and if I make a bad trade, it's on me. You are right that if you don't know what you're doing trading, you shouldn't trade anything, period. You shouldn't even start. You want to buy something and hold it like Bitcoin and you don't know how to trade, that's fine, do it. But
no,
yeah.
I didn't specifically mean knowing how to trade as in knowing the indicators, having a trading system. I didn't mean that. I meant you guys have been into the space for a long time. You're very experienced.
Yep.
You really, maybe you're undervaluing how difficult it is for a person that's not too much into technology to kind of understand what a wallet is, even what the key is and how to use it, and then you're giving a solution. Okay, you can get a Trezor stick and everything is safe. What? This is already too far for this guy. He has to use a Trezor stick and a memorable password and all this kind of stuff. So for these people, CFD brokerages, they convert people easy because they're simple. You just go there, do KYC, deposit your fiat, and you're trading. Instead of having to learn all this stuff and have to decide, am I going to use like a Trezor, or am I going to use another stick, or am I going to go cold storage, or which exchange am I going to go? I've heard this was hacked, that was hacked, so I don't know what to do. That's what I meant. People who don't know how to trade in general, they don't have a trade system, anything, well, yeah, they should educate themselves first, then they should try either crypto exchanges or CFD brokerages or anything.
There's no right or wrong answer.
So, and one thing I've always been curious about is typically if you have a stock account or even regulated financial instruments, if there's rules, right? If something happens to you or something like that, it will go to your spouse, your children, whoever it may be. I would imagine that there's, guys that started buying crypto in 2006, 2005, became millionaires, supporting their family, and then one day they fly and they go away.
Oh, yeah.
What happens? I mean, if you personally, like say you have a family at home, is there like a protocol? Do you need to set those up? Because the exchange isn't going to go give it to your wife.
Of course.
Yeah. So how does that work? And you can't give your lawyer your code because they could take it. So how do you protect yourself? Like how do you real wealth has to be transferred generationally, right?
Yeah.
Real estate, fiat, whatever it is. I mean, with fiat, it's inflationary, so you lose some. But how can people transfer wealth from generation to generation on a crypto where it's very secretive?
Well, there's actually quite a few things. There's a protocol called Safe Haven that just came out, and what it does is it basically lets you write your own will in code. And so if you do pass, someone would get that code. But you could do multi-signature wallets. You can do a Google, what's it called? A dead man switch.
But how prevalent? Like how many people with a family that have over $1 million in crypto? Like what percent would you say actually set things up to do that?
I would say quite a
few.
few of them teach their kids. Like my kid's 5, like almost 4, not even 5 yet. He's 4, and he already knows what Bitcoin is, and I'm teaching him now because it's the future. And so getting people ready, education, like I came from education, and the most important part is actually teaching people how to use it. Are there solutions coming for that? Of course. Do you need to be safe? Of course. Can you get a safe deposit box, put your seed key in, and your wife gets it when you die from the lawyer? Of course. Could you get 2 safe deposit boxes and have parts of the seed half and half in there? Of course. Could you write your private key or print out a private key and put it in a safe deposit box? Of course. Could a bank take that key and open it and get your safe deposit box open and check it? Yes. But that's the risk you have to take.
Isn't that what the twins, the Winkle, however you pronounced her last name, they're doing? They're all over the country. Their keys.
Yeah.
So basically, safety deposit box seems like the safest way for if your family knows nothing about crypto, they see that there, then maybe some instruction manual.
You can make a video that explains it and have that stuff. So, you know, I have my seed key in 3 locations: in Canada, here at one house, and here at the other house. So I mean, like, if anything really happens, you know, you make a video, you put it on the Google Drive, and you just like my wife, I've taught her already how to do it. So basically, if you're in crypto and you don't tell your family members how to actually use it, I mean, that's kind of silly. You should tell them, if you're a millionaire in crypto, how to use cryptocurrency, how to get their funds if you do pass. And this has actually happened where people left their money on exchanges, and you can, if someone dies, go to the exchange, if they're like a top exchange like Coinbase, and email them, and actually they will give you, as the wife of the deceased husband, the cryptocurrencies.
If they do proper KYC, AML, like
Yeah.
this FATF, right?
Yeah.
What is it? Can you explain about this new
ACTA?
Yeah, the new
ACTA in the
regulation.
U.S.
FATF.
FAT. Oh, that's the new one with the exchanges
for crypto.
that's
It
coming
seems like
out.
yeah.
And it's still a little nebulous. That's in terms of the different exchanges sharing the information on customers globally. I wouldn't necessarily say it's an opt-in situation, but what they're doing is they're deciding that if you want to be part of, so to speak, exchange association or the global exchanges, you should share information on customers and bad actors to minimize incidents of malfeasance and incidents of fraud, basically. You know, but the problem is the anonymity goes away, and the problem is, of course, with certain countries that require citizens, no matter where they are, to pay taxes. So a lot of people do not like that, obviously.
So what other benefits are there with crypto besides avoiding taxation, money laundering? It seems that's the real value.
It's not for that. You think it's semi-autonomous, so it's not autonomous, semi-anonymity, I guess the word is. But it's interesting because they actually, the feds in the U.S. have actually been able to trace really idiots, neo-Nazis that were sending a certain amount that indicates they are a neo-Nazi, and then they knew
A certain amount of crypto indicates you're a neo-Nazi?
certain amount of crypto, 0.0 something that indicates the digits. If you look this up, it indicates you are a supporter of the neo-Nazi. So that amount was sent to a certain Bitcoin wallet. They then saw that amount kept going there. So they identified the sender as a neo-Nazi. That wasn't the problem. You could be a neo-Nazi, but they verified that millions and millions of dollars, tens of millions, were going there to be used for illegal purposes. So they were able to trace it. So it's semi,
You guys seem kind of against the whole normalizing crypto, putting it out in the open.
There's normalizing, but it's interesting because if I was back at the major firms, I say major firms because I worked at the big tier investment banks as a advisor, wealth manager, institutional sales guy, derivative guy. If I was back there and I tried to trade crypto, I'd be most likely dismissed, fined tens of thousands of dollars, cited by the regulators. So you know that basically almost nobody, unless they're at a hedge fund or very, very quietly is trading crypto, who is working for a major financial institution or allowed on a specialized desk to do so, which is very, very few people.
Just before we go on more on that, I did have a question for you, Alex, about the C-Trader. What specifically did you do to the platform in order to allow for crypto CFDs? Besides maybe, 8-digit pricing?
Actually, it doesn't work. It doesn't work. Thanks. Sorry. Doesn't work either.
Hello?
Pass them all around.
So, it was very easy, actually. It was very easy to incorporate cryptos on CTrader. All you have to do is actually add more digits. There is really nothing else. Margin is ready. The fiat currencies are there. You need the other thing is that you need to integrate with liquidity providers that you're going to get the price feed for cryptos, which is something that wasn't there before cryptos came. So Spotter had to create adapters, and they had to integrate with different liquidity providers. So besides that, that's all. It was very easy.
Yeah, but can your CFDs, can I convert them or exchange them? Is there any way to convert to exchange into the actual instrument?
No, CFDs are not deliverable assets.
They're not deliverable. So it's almost
depending on the price.
Trading air.
Non-deliverable derivatives.
Well, before trading air, we can talk about options, futures. These are the markets you're in as well. And fine futures you can deliver. Options fine you can deliver.
future options can be converted based on exercise into that instrument.
Contracts for difference were created in the scope that, contracts for difference were created in the scope of speculating on the price. That is the purest form of what a contract for difference is, compared to I want to physically hold Bitcoin to, because I believe in the project, or I think it will increase in price over the course of years if you're doing a hold, buy and hold type thing. Contracts for difference are, in my opinion, much more for the guys that are doing faster trading strategies, automating trading strategies, wanting more leverage in the market. And I'm not saying leverage is a good thing or a bad thing on cryptos, because they're already very, very volatile as it is. But these are for the guys that say, hey, I want to have an automated strategy, trading, in milliseconds, very fast execution, in and out on trades, speculating on price. I'm here to make money as a fund doing it that way. I do not care about holding the positions. I don't care, about actually physically ever getting the Bitcoin back. I'm just speculating on the price.
Yeah. Did you guys see yesterday that the CFTC approved physically backed Bitcoin futures?
I didn't see it to be up.
Yeah, so yesterday, the New York...
What's the difference between this and what they did like a year ago?
So a physically backed Bitcoin future means they actually hold Bitcoin and can settle in Bitcoin. So it's not like... it's not like we're trading something on speculation. We're actually trading something that we have to hold and then get paid out on. So it's pretty cool because
The exchange will hold the Bitcoin down?
the exchange will pay you out in Bitcoin.
So in other words, it's not just a derivative, it's a instrument that could be delivered, such as coffee, sugar, cocoa, cotton.
So before it was all cash settled, and then this will be the next one for this to have physical delivery, which is an interesting thing. And now we just have to see, is there enough volume, demand, et cetera, for it?
Well, because right now it seems the best case use for it is to use crypto CFDs if you're an actual crypto enthusiast, would be if you say you sell Bitcoin for your business, you want to lock in the price. You buy $100,000 of Bitcoin, you can short a CFD, and then you don't lose on the fluctuations.
Right, you could lay off the risk. It's interesting because what you're describing is what's been done with gold, and I had a personal experience. So I can envision the future 5-10 years out, someone saying they want a Bitcoin and they get delivered and it's held at a warehouse and you have a cert, this is your Bitcoin, and it's backed by a major exchange, CME, and your cert says, I own that. You take that to your broker. A few years later, you have your cert. He verifies it, sends it to the exchange. It's verified, and that open interest literally pops up on the screen. You can now liquidate, your position. So that is probably the future.
And then I guess on the CFD side, do you see many of the FX firms and CFD firms adding on an actual crypto product? And conversely, to the guys on the crypto side, I know I've seen a lot of the exchanges at margin trading. Do you think the next phase is to add a CFD, or maybe the margin trading will just be CFDs?
Well, is margin trading technically a CFD on Binance? How is it structured is a good question to ask.
You have to physically own Bitcoin to actually trade on margin on, I think, pretty much every platform I've ever used. So BitMEX, you deposit Bitcoin and you trade to make more Bitcoin with that. You have to physically own Bitcoin. And that is something that anyone who's been around since 2009 to now, or anyone who's been around for at least 3 or 4 years, we don't want paper-backed loan Bitcoin. It just turns into an IOU system, and people will not have
Paper-backed loan Bitcoin, what does that mean?
It's like basically you don't actually hold the Bitcoin. There's only a certain amount of supply, and then saying we're just going to give, this Bitcoin out and, not actually hold it. And then it just kind of waters down the whole industry. And we want actually people to hold Bitcoin, not because, for me, it's not about the money increasing. It's about the decentralization of finance, basically getting rid of all these major institutions holding all your funds and controlling everything, or having governments, like in the US, printing as much money as they feel like they need. And I mean, this is a problem. Yes, Bitcoin does have mining, and we do increase the supply over time, but we have it's fully regulated, and actually decreases over time how much the supply is released. And that's a good thing, because it means it will actually change the way finance was working from the past. It won't be, when fiat currencies do what's happened in Venezuela, what's happened in Brazil, Argentina, Turkey, all these countries, and I mean, Zimbabwe is another good example. Countries that have inflationary currencies where they can print as much money lose value. The US dollar is worth 99% less than it was when it first came out, and Bitcoin is worth 11,000% more than when it came out. So, I mean, that tells you over time which one could possibly be a little bit better for the future. I don't think cash is going away anytime soon, but I do think that we'll probably be trading digital currencies, whether it be mainly Bitcoin or Ripple or anything else. We're probably going towards that, because I mean, look at China is a really good example of that as well.
To answer your original question, yes, CFD brokerages are adopting crypto. Since we are also providing liquidity for many brokerages.
Also, I think as a payment solution, they're doing the crypto, right?
Yes, when they can, when they're allowed, when they don't face banking risks with their banking providers, when they can do it. So they're adapting crypto when they can, both for payment, and obviously they're adapting the symbols for trading. Traders do ask for cryptos. The volumes, to be honest, in the CFD space, there aren't, besides some some exceptions, there aren't that much. People ask for them, traders ask for them, but traders, I mean clients, have used to receive everything that they ask from CFD brokerages, because CFD is a very mature space. This industry, this industry very well. It's been here for 20 years. It's very mature. We're used to giving people whatever they ask for, and they do ask for crypto trading a lot, but in my opinion, the volumes aren't that much.
They still across your platforms on percentages of Forex versus crypto.
I would say that Forex is still the king. I would say 80% of the volume is Forex. Then maybe 75. I don't know. Maybe then stocks and indices. Indices actually are pretty heavy on volume. And after that, we have stocks and crypto getting the rest of the pie.
And what tools, how do you prevent market manipulation in crypto? I know in CFDs, for example, there was a big trader in London that went to jail because he would go buy on the exchange, and they have watchdogs for that. But what's to prevent someone from buying up 20%?
I want to know the answer to this also, because I think that you cannot really prevent market manipulation in any mature market that's just starting out. I'm sure there was a lot of manipulation in a lot of cryptocurrencies.
So you're trying to tell me Deutsche Bank doing $235 million of manipulation in the Forex market is not manipulation? It happens everywhere.
But
no, I didn't,
Deutsche Bank,
I didn't say that.
Different case.
I didn't say that at all.
In Forex, it's a function of liquidity, right? So you have to be one of the top 4 banks or a central bank.
Of course.
I say you have to be the central bank to manipulate.
Right.
To buy up a $40 million market cap, run it up. What's to prevent that? And will there be rules against insider trading, like maybe having to post interest where people are, like on the CME, no one can hold 80% of the entire market. Well, but in a crypto, you can. So how is the market going to evolve?
Regulations are, coming from the regulatory side. Regulations are can be sometimes very heavy-handed. So there's the problem of being too heavy-handed and letting the market do what it will do, as people want. Deregulation is very good in some markets, and this is a very, very, intricate topic. But in the crypto space, I think you do need some, I would say, before, you do need some regulation. There's a lot of front running, there's a lot of manipulation, there's a lot
Are there things going on to prevent that sort of thing?
I think, honestly, I think the start of it is the CFTC regulating there. Now I think going forward, my picture, my visualization is you'll see licensed instruments on the various futures exchange that replicate actual crypto that will be in a type of cold storage at the exchange, because we know the exchange, as they're already holding gold certs and other non-easily deliverable instruments, could be backing them. And then I think what you'll have is similar to the CFTs, you'll have options that will be totally fungible, and then you can literally transfer the crypto, you can literally transfer the options from exchange to exchange. That's what you can do now on futures options, equity options. So people usually stay on, one exchange, but they are fungible products. They can be moved from one to another.
By the way, something I would like to add here, which I should have said in the beginning, Spotware, the company that creates CTrader, also has a product called C-Exchange, which is actually a crypto exchange. They're not running their own crypto exchange. They provide the technology for any company that wants to run a crypto exchange.
How has that worked out for you guys as a product?
First of all, it's not me.
Probably
It's
tied
not
to the
me.
price of
It's not me
Bitcoin.
because I'm not Spotware. I'm TopFX.
Yes.
But for them, they finished development pretty recently, so they're now in the stage of selling it and marketing it. So the process was, from what I know, wasn't that hard for them because they're very experienced in trading software. And CTrader has already matured very much as a product, being 10 years in development. So it was, I would say it was kind of a 3 to 6 months project, so it was pretty easy. But they had, however, to create the wallets, they have to create matching engine, have a real exchange. So the reason I'm mentioning that is not because I'm an expert on it or I use it, we promote it via TopFX, we don't. But I just felt that it's something that had to be said, because the front of this exchange is again CTrader. C-Exchange, the platform on the front is CTrader. So you can actually use CTrader to trade real crypto as well and hold real crypto in your wallet, as long as you can find a broker that offers this service. Sorry for this
So I guess in CFDs, what drives the volumes traded, and with the crypto, for you guys, I'm going to ask, other than the price of Bitcoin, what causes people to say, hey, I want to open an account? So first we'll start on the CFD side. What causes someone to say, hey, I want to open a CFD account? What is the main driver for them?
Well, it's a good question. I think in some cases the foreign exchange industry is really going multi-asset anyways. And when I mean multi-asset, I mean offering CFDs on things like metals, indices, single stocks, different futures products as well, whether it's commodities, things like that. So in our industry, we're seeing a big drive for brokers to offer more to their clients, to give more things to trade on. Some take this to huge extremes, and we'll make a CFD contract in 5 minutes on any product that probably is not exchange backed, and there's some risks there. We have a full suite of products here, but I think most of our clients come to us with an idea of something that they want to trade, and if you have kind of the full offering of it, it gets people more excited, such as having like a crypto CFD, where right now, I would say at my firm, some of my institutional clients, I'm getting a lot more calls being like, do you offer Bitcoin, things like this, which we do on the CFD side. It's price movements, right? Same way you're seeing gold kind of rally to 5-year highs right now. I'm getting a ton more calls on gold, or looking at the, where the silver market is in the moment, or looking at dollar with Donald Trump and things like that. So I think price dictates a lot of demand. And,
I would sorry to interrupt. I would perfectly agree. This is the standard way that a trader opens an account in a CFD brokerage. most usually they hear or their eye catches some instrument that's doing some heavy movement. And they're thinking like, hey, I could have predicted that. I kind of thought that. You know, and now the stock exchanges are very high, so people are expecting the markets to crash for years now. They're not crashing. So that means that they are waiting for gold to go up, which is a safe haven currency. So whenever they hear something on the news or see something like that, they're thinking, okay, how can I make money off that prediction?
War, tragedy, things like that.
Yeah, sure. Or of course, you can short an index or same thing from a strategy. And they're thinking like, so how can I make money from that? If you want to make money from gold without going into the CFD space, and then you want to make money from stocks, and you want to make money from Forex, and you have to go to all these different places, getting to futures and options and deliverable contracts. These are very difficult for a person who has this mentality. Okay, you know, I just want to make money out of my prediction. For this person, very easy. They go, they deposit with a credit card, they test the platform out with a demo account, they have all their instruments in their disposal, they have no hassle about understanding how the real market works, about how liquidity works, about deliverable, not deliverable products and all this stuff. So I would say that's how usually retail traders open a trading account. Or after education, after someone teaches them to trade. If they want to trade something multi-asset, they will go to CFD. I'm sure if they want to back the crypto as a technology, they will just go to crypto and not see anything else, and that's what they should do.
I mean, my sentiment's the same thing. What drives people to trade? Emotion, FOMO, excitement, something's moving and they don't want to miss out. And that's no different from any of the instruments you guys are talking about than it is in crypto. I mean, it could be Bitcoin or it could be the new cryptocurrency that actually, like Libra, which really people are getting excited about, even though it's a stable coin, it drives people's like motivation to get involved. And so when Libra started, I started getting phone calls and messages on Facebook and Telegram messages from friends I've been telling about Bitcoin and cryptocurrencies for a while. They saw Bitcoin moving and it wasn't as exciting yet. But once they saw Facebook, they were like, in Google with LinkChain, or Chainlink, sorry, they were like, whoa, like this is real, like this is a real thing. And I was like, yes. And so that's what drives people. People don't get into trading unless they want money. And one of my favorite traders, Zoran, he said it just like 2 days ago, he said, I don't trade to be cool or popular, I trade because I like money. So that's pretty much what drives people, regardless of it's crypto or anything else.
Well, there's two sides to it in my mind. You have a team of, tech evangelists out there, many tech people that are very motivated by their project, their white paper, their team members. They hope to, and many times they do, bring in the investors on board to buy, hold, and invest in their project, whether it's the exchange offer, previous ICOs, or right now in the marketplace. So I believe in it. I believe in what they're doing. I believe in these guys. I believe, and they're on the tech side. And
these are like more of the aficionado crowd that entered the market.
Yeah, they originally
right?
entered the product, and now you have guys like me who come over from the finance side, who have experience in a lot of the capital markets and understand it back and forth, and know, can read the tea leaves, and they're looking at it from the quantitative side. All right, what is the return? What is the downside? What is the upside? What is the risk? How much cash flow is going in there? What is in terms of the coin, how much cash flow is going in there? What's the money flows? What does it look like? How many blocks you're trading? What size? What is the...
How long have you been trading, Ruben? In crypto?
Oh, in crypto, about 3 years. In other derivatives, since
so can you give like one example of the biggest, most frustrating thing that happened to you while trading crypto, and one example of the most frustrating thing that happened to you in trading other products as a user?
Well, let me preface that. Okay, sure. Crypto isn't. A lot of people think it's divorced from the real world. A lot of people think it's delineated from the real world. And I beg to differ, and if I pursued, which I was going to, but I still may, a PhD in finance, it's partially behavioral finance, but partially it's all related to interest rates. I'm sorry. And anybody that disagrees with me, we can go over this for hours. The reason I say that is the second the Fed in the U.S. says they're not going to tighten, we're going to start going the other way. Based upon that, crypto and gold and all the risky assets start going up. Why? Because the downside is limited. Why? Because the cost of capital is cheaper. Why? Because it's easy to leverage it up and it's easy to put institutional money in there. So that's the quantitative side. In terms of what you were asking me, frustration, or what was it?
Just real quick, Bobby, I know does the audience have any questions?
No time.
Anyone? You guys have anything to add? Final.
Well, you were asking me, a company like EOS, it was originally Enterprise Operating System, it reads $4 billion US. They personally that's very frustrating because the market cap of the coin, even though they say you have no rights to any upside, and you have no rights to make any money, we have nothing to do with the $4 billion. It's like, well, why do I want to buy it? Well, because you believe in the project, but I get no upside on this side. You're telling me I have no upside. Yeah, but I still want to buy it. So then it goes down to $1.80 during the blowout, and everybody's like, oh my gosh, and it's back up to, $7 US, whatever now. So that's a key frustration. On the real world, you're asking about that, I lost, first time I saw the Fed tighten, I put in, I was short futures, Eurodollar, Fed fund futures, and I made some money, and I said, well, what happened? It didn't go down all the way. And that was my first indication that, sit with the position, relax, sit with the position. And the trader on the floor who said, well, you got hit, so that's your tuition. That's what you paid for,
All right.
learning.
So I want to thank you guys and thank the audience for participating in the panel. Hope you enjoyed it.
Thank you.